there, good morning. You're watching Market Cafe with me, Snehi Shah, on ET Now. Now, this is a show where we take you through all the important global stories that you need to be tracking, all the important stocks that could be potential buzzers in today's trading session, as well as what brokerages are pointing out for you, and everything else that happened in the world of equity as well as commodities overnight. Let's begin by looking at what the global handover looks like, and let's start with the US markets because stock futures oscillated near the flat line on Wednesday as traders prepared for the August Producer Price Index, which is a measure of wholesale inflation. Now, during Wednesday's regular trading session, the 30-stock Dow stumbled for a second consecutive day, dropping 0.2%, dragged down by the 3M stock. The Nasdaq Composite closed higher by nearly 0.3%, while the S&P 500 added just 0.1%. So not much happening when it comes to the US markets, rather flat moves overnight. And the August reading of the Consumer Price Index was a key event for traders. The core CPI, which excludes food and energy, gained 0.3% from the prior month and 4.3% from the 12 months earlier, which is on a year-on-year basis. Now that compares against the estimate of 0.2% and 4.3% respectively, according to economists polled by the Dow Jones. Headline inflation, meanwhile, increased 0.6% on a monthly basis and 3.7% on a year-on-year basis, while economists had called for that 0.6% mark and the 3.6% mark on a year-on-year basis. Now, the August CPI reading isn't expected to change the Federal Reserve's course at its policy meeting beginning September 19th, and Fed funds futures pricing data from Wednesday shows a 97% likelihood of rates remaining unchanged next week, according to the CME Fed Watch tool. So, largely, this is what is happening in the US markets. This is what happened overnight. Flat moves, not happening much. Let's shift focus and look at European markets because European stock markets closed slightly lower on Wednesday as investors reacted to stronger than expected US inflation data. The Stock 600 index ended down by 0.3% with sectors and major bosses in the negative territory. The retail stocks were the one that led the losses and dropped almost 1% in trade. So mixed handover coming in from the US, slightly negative handover coming in from Europe. But this is on the equities front, and I'm joined in the studio by my colleague Harsh Saita. Good morning, Harsh. Take us through what oil and other commodities did.
Well, yes, absolutely, Snehi. So, oil actually has been whipsawing, and that's what we saw even yesterday. We saw oil rise quite sharply on the back of the fact that OPEC Plus believed that there was going to be tight supply of oil for the rest of this year as well as and especially for 2024. So, you saw that bit of a spike. But that's cooled off pretty much immediately on the back of the fact that the US has built up better than expected inventories of oil, which is the highest since November. And that essentially means that this surprise crude build-up by the US means that oil prices have again sunk a little bit. They've seen a bit of a dip. So you're seeing WTI just below the $89 a barrel mark, and you're seeing Brent just above the $92 a barrel mark. So definitely a positive across both of those for oil.
Well, with that, let's also take a look at all the important cues that you should be keeping on your radar today. And well, we've got a series of data, and we've got a bunch of data coming out, which is the India balance of payment data will come out today. Wholesale prices will come out today. US PPI data will come out today, as well as the Bank of England rate decision will also come out today. So keep an eye out on all of these cues. Followed by that, in the IPO action, the primary markets, we've got Samhi Hotels, which will open for subscription today. So keep an eye out for this IPO as well. And in the market action, well, today is a Thursday, so that marks the Nifty weekly expiry. And in terms of other events, when we look at the zero, then the SAT will continue hearing Puneet Goenka's appeal, and Tata Nexon will be launching its EV today. So keep an eye out for all of these events in today's trading session.
Right, and quickly moving on, the big news since yesterday was, of course, the US CPI. Right off the bat, let's go to where US stands on the inflation data. It's come in as expected. Headline inflation rose 0.6% month over month for the month of August and 3.7% year over year. This reflects higher energy prices in the region currently, and core CPI too rose 4.3% on a year-on-year basis, which is the first time it has actually accelerated in the last 6 months. So how will it move markets? And the much anticipated rate decision from the Federal Reserve over the next couple of weeks will also be something that we will be watching out for. And we spoke with Jeff Dennis, who's the who's an independent emerging markets commentator. He shares his take on the same.
Gasoline prices rose 10.6% in this report in August. I doubt we'll get quite such a big number in September, October. In other words, I don't think oil prices will rise at the speed they've done recently. But the problem here is that we're seeing a squeeze of supply from Saudi and from Russia, from OPEC Plus, if you like. And I'm sure there's a geopolitical background to that as well, ahead of the US election, which of course is only just over a year away. What could be the offsets to squeeze supply from OPEC Plus? There could be some oil coming from Iran, as we seem to be close to a US-Iranian agreement to swap hostages, etc., and that could involve some increase in oil supply. Also, the US oil industry is pumping pretty hard right now, and of course, ultimately, if real interest rates stay pretty high, you may see the US economy slowing down again, which will hurt demand. So I think it's very unclear what happens to oil prices from here, but you've got to presumably see some sort of risk that they do continue to go further. And that will give you more, quote unquote, transitory inflation, more rise in the headline rate. And I think right now, I think it's a better than 50% chance the Fed will go again in November.
Well, let's see what impact these inflation numbers have on the US Fed meeting next week. And today we also have the European Central Bank meeting and not the Bank of England meeting. Pardon me for that. But let's move on then. And chip design firm ARM has finally priced its initial public offering at $51 per share, taking the valuation to $54.5 billion. The company is riding the wave of excitement around AI as it aims to crack open the tech IPO market after a nearly 2-year pause. And remember, it's set to be the biggest technology offering of the year in the US.
Right, and tech giant Google is cutting hundreds of jobs in its global recruitment division. The job cuts come amid a broader pullback in hiring over the next several quarters. Employees involved in the recruiting group reductions will receive emails with the intimation regarding the layoffs. Remember, Google parent Alphabet announced elimination of 12,000 roles affecting 6% of its total workforce.
And keeping it with job cuts then, Goldman Sachs has fired several executives in its transaction banking unit as per Reuters. This comes after the violation of firm's communication policy. Meanwhile, Citigroup will be stripping out a layer of management in a reorganization drive, giving CEO Jane Fraser increased control.
Right, and a slew of tech titans met with US lawmakers at Capitol Hill to discuss AI regulation. This includes the Tesla and X chief Elon Musk, Meta chief Mark Zuckerberg, Alphabet CEO Sundar Pichai, to name a few. The gathering was part of an effort led by Senate Majority Leader Chuck Schumer and a bipartisan group of senators to craft groundbreaking AI law.
Well, with that, let's quickly slip into a very short break. You don't go anywhere because when we come back on the other side, we'll take a check at how the Asian markets have opened up this morning.
Watching Market Cafe on ET now. Let's quickly move on. We told you first and now it's confirmed. It's the biggest land deal in Mumbai as Bombay Dyeing approved sale of the Worli land to a subsidiary of Sumitomo for more than 5,000 crore. Sharad had broken the story in April. He joins in with more details on this one. Sharad, good morning.
Well, yes, in focus we are having Bombay Dyeing, and the important story here is that the board has actually approved the sale of its Worli land for 5,200 crore rupees to the Japanese arm of Sumitomo Group. Now, important thing is this land parcel is roughly 22 acres in the prime spot of Worli in the city of Mumbai. Also, this sale will happen in 2 phases, and the first phase is expected to be completed by October this year. Also, looking at the numbers, also we see the total consideration is roughly 5,200 crore rupees, and of course, in the first phase of payment, the numbers which the company is expected to get is almost 4,675 crore rupees, while the balance 525 crores will be given on a completion going ahead. Also, the company had stated that there would be a pre-tax profit of 4,300 crore rupees, which the company would be looking out for. Also, the company has approved the development of the unutilized land parcels as well. But what's the actual impact which is expected to kick in? And the first one, of course, would be that the net worth would turn actually positive, as the market cap is actually below what the pre-tax numbers are coming in for the company. Also, the debt reduction plans, and the company itself is looking to pay dividend out in future. Now, also important impact would be the treasury income part, which they will be actually using it to fund the future realty projects. As of 31st March to 2023, the net debt numbers, they stand at roughly 3,460 crore rupees. But there was an important guidance also coming in for the realty segment, as well as going ahead, they have stated that the potential would be to create roughly 35 lakh square feet of commercial or residential projects, and that would generate a revenue of roughly 15,000 crore rupees. And on April 18th itself, as exclusive to ET Now, we had broken the story that the company is considering monetization of its non-core assets.
Thanks, Sharad, for breaking that down for us. And to understand more about this deal, we will be joined by Rahul Anand, who's the CEO at Bombay Realty, at 8:20. So keep an eye out for that one. We will understand the impact of what this deal has. That's an ET Now Newsbreak confirm coming in. Remember, we broke this news first in April. But let's get a move on then. And Mumbai has witnessed its biggest land deal worth 5,200 crore rupees. This one, Wadia Group entity Bombay Dying and BMDC approved a 22-acre land parcel to Goisu Realty. Listen in to the CEO of Bombay Dying, Rahul Anand, on the phone line for more.
The proceeds of this, I mean, this is all contingent on shareholder approval, but the proceeds of this, when they come in, will primarily be utilized to eliminate our debt, which is there on the book. So this is just part of our board strategy, which started last year, that we wanted to first reduce the debt, and then basically eliminate the debt. So we put part one of the strategy to work last year, where we sold a lot of our inventory in ICC. And abhi strategy ye hai ki with these proceeds, hum pura debt apna eliminate kar denge, and we will have money on the balance sheet to fund our future projects. और ये पूरा जो जिसका जो the whole aim of this exercise and the vision that was laid out by the board was singularly to create sustained shareholder value and create wealth creation for our shareholders. So the debt will be completely eliminated with this. It will become zero, and we will have money on the balance sheet as well. That exact amount of money, we are still working on that exactly how much will be there on the balance sheet, but the debt will become completely zero.
Right. Let's quickly move on from that story. Union Minister Nitin Gadkari's comments on pollution tax has resurfaced the debate on diesel fuel and its use in a country like India that is battling climate change as well. Although he clarified no discussion about a pollution tax is underway, automakers have concerns about how it will impact their profits if it were to come into action. Remember, India is still heavily dependent on diesel-run commercial vehicles. But now the question remains is if major automakers will trade profit for sustainability. To discuss this, we spoke with Hormaz Sarabji, who's the editor at Autocar India, and Chandra Bhushan, who's the CEO at iForest. Listen in to their views on this one.
As far as commercial vehicles are concerned, hydrogen and batteries are at least a decade away. I think we need to be very clear about it. There is a lot of noise happening about commercial fleet. I don't think the minister's statement was with respect to commercial vehicle. Everyone knows in the market that to replace the kind of heavy commercial vehicles that India has or across the world we have, we are a decade away as far as getting in mass the commercial vehicle to replace diesel vehicles. So that comment of minister was both with respect to passenger vehicles. I believe that. But going ahead, I do think that companies should start thinking about investing in heavy commercial vehicles.
Diesel vehicles are going up year by year, largely because to make them compliant with tighter regulations, the technology is getting more expensive. And as a result, what you are seeing is that the lower end diesels are totally not viable. You don't have any diesels, below 10 lakhs really. I'm talking about the hatchbacks, compact sedans, stuff like that. You have one hatchback, you've got the Alto still there, but I think, that's about it, because everyone realizes that diesels are getting very, very expensive to produce because the cleanup technology that is needed to make them super clean is like having a laboratory on wheels now.
And well, in a boost for local sourcing pushed by the centre, Tesla plans to source auto components worth $1.7 to $1.9 billion from India. Now, this is nearly double of what we saw last year. Listen in to Commerce Minister Piyush Goyal on just that.
Tesla already last year bought $1 billion of components from, I think, all of you sitting here. I have the list of companies who supplied to Tesla. This year, their target is nearly $1.7 or $1.9 billion, what they mentioned to me. Yesterday, I had a conversation with some of the other auto industry participants, and they also indicated that they have interest in coming to India. And therefore, I'm convinced that this is the future.
Right, let's quickly switch over to EdTech major Byju's. It's come under fire once again. This time the accusation is that Byju's concealed more than $500 million in a hedge fund. Anurag Joshi is here with all the details on that one. Anurag, take it away.
Media reports that Byju's concealed over $500 million of money from its dollar-denominated term loan B facility. The EdTech giant has said that it indeed invested in a multi-$100 billion fund. Byju's, in its defense, said that the creditors' pact does not bar the company from moving or from investing the money, and this cash is not a collateral. Now, this is coming close on the heels of reports that Byju's is planning to repay the entire $1.2 billion of the facility back to the creditors, and that it is looking to sell off two of its assets, Epic and Great Learning, to finance the repayment. Now, this tussle with the creditors goes back to the end of 2022, when the creditors for the first time had demanded a part-free payment. That had escalated into a legal battle in March 2023, when creditors dragged the company to the court amid certain technical defaults, and these defaults related to the non-releasing of the financial statements for the company. The company had been in a legal tussle, and recently it had been trying to resolve the issue with the creditors, but that impasse is still continuing.
Well, thanks Anurag so much for that roundup on Byju's. But as the festive season kicks in, how is the auto component industry gearing up? My colleague Sumit Chaturvedi caught up with the incoming ACMA President Shraddha Suri Marwa. Listen in to that conversation.
So I think the sector is doing very well. The first couple of months have been good. We are seeing a buoyant year ahead, and it's going to be better than last year, at least in the passenger vehicle industry. So no reason to complain.
And talking about the overall coming festival season, you think the demand is good, and that's what is going to, the impact will come to auto component sector also? It's going to be good for the auto component sector also?
Yeah, for sure. Onam just went by, and that led to almost a 15% increase over last year. So that's an indicator of how the festive season is going to go. We are very, very gung-ho, and we're hoping for the best.
And talking about the exports, though earlier there was some pressure or maybe pressure in certain sector as far as exports are concerned, what is the outlook on exports now? What are the new markets auto components of India component makers of India are looking at now?
So I think exports is something that the auto component industry is really very gung-ho about. We have a large order book that's coming our way, and after China Plus One happened, India is definitely the preferred supplier, and we have absolutely no dearth of what's going to come ahead.
And talking about innovation, that's a sector in which I'm sure many component makers are going forward to or working forward in. What about the innovation, and what about competing with the best in the global auto component sector? Because Indian auto component sector is clearly second to no one when it comes to providing your parts to the world. What's the new areas or innovation all that you are looking at?
So I think that innovation is big on the agenda. All the companies in the sector are now investing more and more in R&D. There are more collaborations that are happening. So I see that with this investment going forward, we're going to be one of the preferred not only makers but also designers. So there's going to be Make in India, Design in India as well.
Right. Let's switch over to the power space. Tata Power planning to sell more than 1,000 crore of bonds. This is going to be Tata Power's first rupee bond issuance this year. Anurag Joshi joins in and he's got all of that information for us. Anurag.
Tata Power is seeking to sell its first rupee-denominated bonds this year. Sources told ET Now the Tata Group firm is sounding out debt arrangers for a potential over 1,000 crore rupee sale of non-convertible debentures. If this deal happens, this will be the first bond issuance from Tata Power since December 2022, which is the rupee bond issuance. It's now the proposal is taking place at a time when bonds rated similarly to Tata Power are poised to fall at the fastest pace since the pandemic. That is, to be precise, since December 2020, which was the height of the pandemic. It's also happening at a time when consumer price inflation in India has shown signs of easing. The data this week showed that consumer price inflation has eased in August from a 15-month high in July. This has reinforced expectations that the RBI would maintain a status quo and will leave key rates unchanged, and that would help cushion debt yields and may bring more corporate borrowers into the bond market.
Well, thanks, Anurag, for all those details. But let's shift focus because railway stocks spiraled downwards for the second straight session amid profit booking. Now, you had names such as IRFC, IRCTC, Realty, or any name from that pack seeing sharp cuts yesterday. The correction comes on the back of a strong rally in these stocks. So what's next for these railway stocks, and is there more steam left for this sector? Lisa joins in with just that. Take it away, Lisa.
Well, yes, in the last few days, we have been seeing rail stocks spiraling downwards, and that is after seeing a sharp run-up of around 40 to 50% in the last 1 month. Now, experts, they are attributing this to profit booking, and one of the most important trigger for the run-up has been on the back of the G20 summit, where railway and as well as shipping connections deals that were signed. Now, let's find out how each of these companies, they serve their purpose within the railway ecosystem, starting with IRFC, which is the most valuable railway PSU. IRFC was born to cater into the financial needs of the Indian Railways. Now, why do Indian Railways need money? They need money for purchasing various rolling stock assets like coaches, wagons, containers, and they also need money for infrastructure projects, for laying down the rail tracks or rail station. But the key risk for that for IRFC is that their capex that has been on a declining trend, and even disbursement that has fallen 45% on year-on-year basis. The government stake dilution of around 11% by Jan 2024, that also remains a key risk to the rally. Now, moving on to RailTel, it has the privilege of owning the exclusive right to lay optical fiber cables and also to provide cables as well as telecom related services along the Indian Railway network. Now, Indian Railway Construction Company, IRCON as well as Rail Vikas Nigam, they are the two infrastructure wings of the Indian Railways. IRCON, now what is the difference between IRCON as well as RVNL? IRCON is a specialized infrastructure construction company, while RVNL, they implement projects related to the augmentation of capacity of the railway infrastructure on fast track basis, mainly on equipment for the equipment products. Now, while IRCON, they bid even for the private companies and they have significant international presence, RVNL, they function as a subcontractor of the Indian Railways only. Moving on to another company, RITES, it's an asset-light company that provides consultancy as well as technical services in infrastructure as well as transport projects across the country. Now, moving on to the other companies in the rail ecosystem, we have BAML as well as Titagarh Wagons, Texmaco. They are some of the engineering companies. They help build coaches, locomotives, engines, freight wagons, and they cater to both the domestic as well as the export market. Now, though these companies are getting strong orders on the back of Vande Bharat, Metro Rail, but the common area of concern for these companies is that though they are getting strong order intake, the margin as well as the execution, that remains a key concern as the competitive bidding increases. So, well, that's on the rail ecosystem and how these companies differ from each other.
Right, thanks so much for that, Lisa. Let's quickly switch focus from the railways to Adani Wind, India's largest turbine manufacturer. Shifting focus, Adani arm, which is Adani Wind, bags a certification for India's largest, which is 5.2 megawatt wind turbine generator. The certification enables Adani Wind to start series production for global markets. The certification also thereby confirms that the generator complies with international standards and regulations governing design, testing, as well as manufacturing.
Well, with that, let's slip into a very short break on this edition of Market Cafe. But when we come back, we'll take you through a list of all the stocks that could be potential buzzers in today's trading session. So keep watching.
Right, brothers. कह रहे हैं कि humans can fly.
Now let's quickly take it. It's that time of the show to take it to Ansh, who's here with the F&O snapshot for the day. Have a quick look. Ansh, talk to us about those numbers.
Sure. So let's start with Nifty first. Well, after two failed attempts, Nifty finally gave a closing about 20,000 mark for the first time. However, the index kept itself constrained within its previous sessions range, indicating indecision in the market. Whereas mid-cap and small-cap index bounced from its historical support of 20 DMA. Now let's see what happened in F&O segment. Long build-up was seen in Nifty futures with OI increasing by 0.8%, keeping sentiment positive. Whereas on the option front, we saw good call buying at 20,150 strike, but call writing at 20,250 strike. This indicates that traders are expecting Nifty to climb about 20,150 level, but not about 20,250 level. Whereas on downside, we saw good put writing at 20,000 level, showing support here. Now let's shift our focus to what FIIs did. In index futures, they covered 3,700 short contracts. They added 10,700 long contracts. So in a net basis, we saw a up move of over 14,000 contracts on upside, because of which we see FII long positions jumping from 63% to 66%. Now on option front, this is interesting data. We saw net call of minus 1.1 lakh contracts and net put of minus 1.9 lakh contracts. Hence, in value terms, we saw FII index option selling of around 31,406 crore rupees. This is the highest level of net selling in options seen in at least past 2 years by FIIs. Now, what this suggests? Call traders are skeptical about index rising significantly, whereas put traders are not strongly betting on index falling. So in short, this is a state of indecision, or you can also call it a range bound session coming ahead. Also today we have Nifty weekly option, so one can expect some volatility before the closing.
Well, expiry today and a range-bound trading session, as you are pointing out to Ansh. But amid a session like this and a market setup like this, take us through a list of all the stocks that could be potential buzzers in today's session.
Right. So Bombay Dyeing will be the first stock in focus for today's trading session, as company has approved sale of 22-acre land parcel of approximately 5,200 crore. This land parcel has a potential to create 3.5 million square feet of property and generating around 15,000 crore revenue. Apart from this, NIIT Learning will also be in focus, as company has introduced the XSEL learning platform with Century 21, a significant advancement in real estate education. IRCTC signed an MOU with MSRTC, allowing travelers to book various modes of transportations through IRCTC portal. Wipro inaugurated a cyber defense center in Germany, bolstering cyber security efforts. Lastly, Bajaj Healthcare will be in focus, as company received positive report from US FDA following their inspection at their manufacturing facility situated in Gujarat with no significant observations. So keep an eye on the stocks.
Right, thanks so much for that, Ansh. That was a good roundup for both stocks and news as well as F&O. Let's quickly move on. Let's look at some of the initiate notes that have been released by brokerage houses. Investec has initiated coverage on Fusion Micro. Prabhudas Lilladhar has initiated on Suntech Realty, Incred on data patterns, and DAM Capital has initiated on a whole host of sugar stocks. Vamakshi is here with all of the details on those counters. Vamakshi, take it away.
Well, yes, let me first start off with Fusion Microfinance. We have a note coming in from Investec, and they have highlighted that overall the industry is quite resilient and structural developments are in fact creating a very strong outlook. The company does have a prudent expansion strategy, and overall they're expecting a very strong AUM growth of almost 25% CAGR. That coupled with profitability of almost over 20% return on equity over the next 3 years. So given all these positive factors, Investec has initiated coverage on Fusion Microfinance with a buy rating target price of 780 rupees per share. Apart from that, keep an eye out on Suntech Realty because Prabhudas Lilladher has also initiated coverage on this stock. They're expecting the company to post a pre-sales CAGR, pre-sales to in fact grow by almost double over the next 3 years. Strong cash flow generation is also expected to step up new project additions. They're expecting a revenue CAGR of nearly 83% and EBITDA CAGR of 123% for Suntech Realty from FY23 to FY26. So given those factors, Prabhudas Lilladher has initiated coverage on Suntech Realty with a buy rating target price of 565 rupees per share. Keep an eye out on data patterns as well. We have a note coming in from Incred, and they have highlighted that the robust order wins continue to accelerate the near-term growth target for the company. High growth is expected to sustain as the share of the production contract rises. They're expecting a revenue CAGR of almost 40% from FY23 to 26, and on the back of that, they've actually gone ahead and initiated coverage with an ad rating. They've given a target price of nearly 3,000, which represents a significant upside from the current levels. Apart from that, lastly, we'll also focus in on the sugar sector. We have a note coming in from DAM Capital, and what they have highlighted is that the demand supply is in the favorable zone. Domestic sugar prices are seen moving up as well. The ethanol blending program is also progressing quite well, which is again a positive factor for most of these sugar counters, and they're also expecting that the global sugar prices are expected to remain firm in the medium term. So given all these factors, DAM Capital has initiated coverage with a buy rating on sugar counters such as Balrampur Chini, Triveni Engineering, Dalmia Bharat as well as Dwarkesh Sugar. So keep an eye out on all these counters.
Thanks so much for that, Vamakshi. Let's quickly move on. We also had a whole host of analyst meeting managements, and we'll start off with Titagarh Rail. BNK Securities met with the company. Of course, the company was on our channel yesterday as well. What they're suggesting is that they're aiming to reach a capacity of 12,000 wagons per annum by FY25, currently executing at around 650 wagons. So huge tailwind there. They're expecting to ramp up to 700 to 750 wagons in the next 2 months or so, and they are expecting 1,000 wagon per month by end of FY24. So look out for that one. Backward integration is going to aid margins. 100 to 150 bips of margin push is going to come through. You're looking at the Indian Railways, which plans to procure 90,000 wagons by 2025. That's the largest, and it's 5 times the number of wagons procured in a year. Let's quickly move on. JSW Energy, BNK Securities again met up with them as well. You're looking at the company being well placed to achieve 10 gigawatts of generation capacity ahead of 2025. It aims to achieve 20 gigawatts by FY30 with a capital outlay of 1.1 lakh crore. Now, FY30 EBITDA to be around the 19 to 20,000 crore mark versus the 3,300 crore in FY23, and the average tariff for the Mitra project is 4.84 per unit. The PPA is for 17 years. Some of those details also coming through. Let's quickly move on. Macquarie on Axis Bank, the long-term NIM guidance of 3.8%, and they are endeavoring to keep that at a higher level. Hardly been any attrition in senior management with regard where Citibank acquisition is concerned. Even customer attrition levels have been better than anticipated. The credit cards originated by the Citi team is now running at 3 times the level prior to acquisition. So positive on that count as well. Quickly looking at Macrotech, Jefferies is seeing strong, or rather Macrotech believes that the housing market continues to be strong with regard to supply as well as demand, and it's well balanced. They believe that the upturn is structural, methodically growing to deliver 20% long-term sales CAGR. Lodha's strategy is to drive volumes while keeping prices affordable. FY24 pre-sales and cash collection targets are on track. And even after cutting debt below the guided levels, management sees some excess cash surplus in FY24. So across the board, seeing positive commentary across those 4 companies.
Well, thanks so much, Ash, for taking us through a quick roundup of all those management meets. But with that, I'm afraid we're completely out of time on this edition of Market Cafe. But before we let you go, here's a bite belt of two important market voices that you should be keeping an ear out for and listening to what Vineet Samre and Pankaj Murarka have to say.
To me, I think these small falls will be bought into, and hence I don't see major correction unless there are some big negative events which turns out. Importantly, one will have to recognize that the stocks have seen vertical movement upwards, and the earnings growth is not going to be vertical movement upward. Despite these order books and strong momentum, you will have quarterly volatility for these companies, which has always been the case in the past, and hence how one deals with that through the next 3-4 years is going to be the important thing.
We had a phenomenal rally in the last 6 months, so probably a correction was much warranted, or probably better late than never. And I think it's a healthy correction for the market, because there are pockets of markets where we've seen stock prices have clearly run ahead of fundamentals, and there's been a fair degree of exuberance or froth, if I may say so, in mid-cap, small-cap space. So I think a correction is much warranted. Aggregate markets are still reasonably priced. Index, if you look at the Nifty index, trading at about 20 times current year earnings, is reasonable in the context of the kind of earnings growth, strong earnings growth that we are witnessing. So I think from here on, much of the gains on the indexes are done, and markets will be more stock specific in that sense.
Even if the margins were to come off a bit, but I think the growth metrics would be there. The valuations are pretty reasonable, and what we talk about the economic growth, I think that should be played through the banking sector overall. Now the choice can be how one has to allocate between the banking and the non-banking financial companies. I mean, that is left to each one's individual assessment, but I think this is a good sector to own. I keep talking about IT as one of the sectors which I generally have a positive bias towards because of a simple fact that this is a very strong cash generating sector, and more importantly, this is a sector which also distributes a large part of the profit back to the shareholders.
Headwinds in both the sectors are behind. We are seeing in healthcare or pharma, we are seeing earnings growth coming back very strongly this year onwards. So pharma companies and aggregate as a sector will deliver strong earnings growth starting this year. And likewise for the IT, I think the worst of the headwinds are behind, and from second half of this year onwards, we'll start seeing growth coming back to the sector. So clearly, from a relative basis, we find much more value in IT and pharma, and we are clearly taking money off some of these sectors which have done exceedingly well over the last, let's say, 18 months, which is essentially financials and capital goods, and putting that money to work into IT and pharma.
Market compounding rate. The market approach has to be stay bullish, just in the way how markets should be.